Hi, it's Busembo, and today we'll be looking at a quick snapshot of what estate duty is. So essentially, estate duty is a tax on the wealthy. All we're trying to do is raise funds for government to do whatever they need to fulfill. And we're saying that upon a death of a person, we want to tax that estate in order to make sure that we receive funds as government to do whatever the case may be. And you'll immediately see that there's a threshold. If the estate is less than 3 million rands, there is no estate duty payable. So what essentially is happening there is we're saying if you're wealthy enough to have an estate at death which is more than 3.5 million rands, then only we will tax you. Hence the term or estate duty is associated with a sort of a wealth tax. Now, it's so true what Benjamin Franklin said so long ago, that the only thing that's certain is death and taxes. And this is one of those taxes where at death, there's going to be a tax on your estate. It's just the way it is. Harry Joffe always jokes and says a good place to die is Mauritius because they don't have an estate duty tax there. So, I mean, there'll be obviously other taxes, income tax or whatever, but at least there's no estate duty tax. In fact, if you look at South Africa, what our estate duty act used to be called was actually the Debt Duties Act. And I suppose marketing probably came in and said, hey, let's change it. It sounds a bit better if we call it the Estate Duty Act. But nonetheless, it's a tax at date of your at your date of death. So I think it's important to point out, I think today's video is purely focusing on what is estate duty. There's so many things to talk about within estate duty and it get quite complicated. But today we're just going to take a quick snapshot of what estate duty is. So if you look at a quick example that I've got on the board here, if we take a husband and a wife who are married and they have a son. Now, for purposes of simplifying my facts, I'm just going to assume that they are married out of community of property just to make our facts simple, because we're trying to really just focus on what estate duty is. If the husband passes away through a horrible accident or whatever the case may be, now in his will, he's going to have left stuff, or he will have left stuff, say for example, to the spouse, who is the wife, and he may have left stuff to his son. Now, for the purposes of estate duty and just purely estate duty, we need to now figure out how much to tax whatever is going to the spouse. Do we tax that, and how much should we be taxing? And you'll see later on there's an exemption, for a special exemption for spouses. And the alternative is, how much do we tax the son, whatever is being left to the son? How much estate duty should we be taxing whatever those assets are? So in our example, we're just going to assume that the husband had a house, and let's just say the house was worth 10 million rands. And let's assume he was also involved in a business where he owned shares to the value of 50 million rands. And let's also assume that there was a policy on his life and he's leaving that policy to his spouse, his wife, and that policy was worth 10 million rands. And let's also just assume that on that house that he owns, there was still an outstanding bond of 2 million rands as his total debts. Now, if you look at the Estate Duty Act itself, it's really just a long, big calculation, the whole act, with obviously a couple of other things that are important towards the working of the act. But it's really just a big calculation. So if we've said that estate duty is really just the taxation of somebody's wealth, then we've got to take away, for example, things like a debt that he might own. In terms of the Estate Duty Act, we don't tax a debt. we are looking at taxing his net estate. So if his estate is worth X, we're first going to take away whatever his debts are, because that's not passing over to whoever his heirs are. So the date of his death, when we're looking at his property, I've just basically taken his house, which is worth 10 million rands, and the value of his shares, which is worth 50 million rands, and I've come up with a total of 60 million rands. So that's his property. And then we've got to add what is called deemed property. So in terms of the Estate Duty Act, we'll have to put down the policy to the value of 10 million rands, which is payable to the spouse. That means his total gross estate is worth 70 million rands. Now at this stage, we've just worked out what the total value of his estate is, but in order to tax estate duty, we still need to take away certain deductions. For example, if he owed a debt, which in our case he has a 2 million rand debt against his property, then we're first going to take it off, because we're trying to tax the net estate. We're not trying to tax the actual debt. So we know that he's got a debt of 2 million rand, which is the bond outstanding, so that's got to come off. And just for our purposes, I've just assumed the other expenses to total 3 million rands. I mean, the executive fees alone will be over 2 million rands. So, but just for our purposes, because we're just trying to depict what estate duty is, I'm just going to keep it at 3 million rands, but it's a discussion for another time. Now, so this section 4Q deduction comes into effect, and we've also got to deduct that, so we take off 10 million rands there. So the total of all of these deductions and expenses works out to be 15 million rands. Now we've got to now take that 15 million rands and deduct it off his gross estate, which gives you a total figure of 55 million rands. So that's his net estate. Now there's something else that the Act instructs us to deduct before we actually levy the estate duty, and that pretty much goes back to what we were talking about how estate duty is a wealth tax. The Act instructs us to take off 3.5 million rands. Now what that means is, assuming that the estate, which is not the case in our scenario, assuming that the estate was less than 3.5 million rands, that means estate duty is not payable at all. But in our case, we have to take off this abatement that exists in order to work out what the dutiable estate is before we levy the actual estate duty. So when you take off 3.5 million rands from 55 million rands, you're ultimately left with 51.5 million rands, which then becomes your dutiable estate. So 3.5 million rands would have come off over there. So that's basically your dutiable estate at this stage. So the first leg of the inquiry is to work out what estate duty is at 20% to the value of the property of the value of up to 30 million rands. So we take 30 million rands and we simply multiply it by 20%, and that gives us a value of 6 million rands. So that's the first leg of the calculation. So that's that first part there. But then the second part is, because we have an excess of 30 million rands, which is an amount of, what is it, 21.5 million rands. So that is the excess amount that we've now got to tax at a higher percentage of 25. And that gives you a figure of 375,000. And now ultimately what you need to do is take that sum and add them together, and you get a final estate duty liability of 11,375,000 rands in this deceased estate. So now the husband has passed away, and he's left the policy to his spouse, which we deducted for estate duty purposes. So that was fine. However, we've gone through the calculation and we've worked out that he has left other things to the son, and there is no deductions there. So the shares and the property have attracted estate duty, and due to his death, his estate will sit with just the estate duty liability. We're looking at 11,375,000 rands. Now, how might you solve that? He might have to ask his son to sell the shares, which he probably won't do. I mean, you want to leave those shares intact. You don't want to sell the house. You want to leave the house intact. So what you could possibly do in order to solve this problem is to write a policy so that on his death, the policy is payable into the husband's estate in order to take care of the estate duty liability. So I hope you enjoyed the video. That was a short snapshot of what estate duty is. There's so many variations we can do here depending on how people are married, marital regimes, all sorts of things we can talk about. But I thought it would just be helpful just to do a snapshot of what estate duty is. Of course, every client has to be looked at individually, and with doing this whole process and capturing the different things, policies and all those kinds of things, that's where the opportunities for planning come in, because that's where you can structure, for example, in our case, where the policy is payable to the spouse, then that avoids estate duty, at least for the time being. There's so many other things we can talk about, but this was just a snapshot. If you haven't subscribed, please don't forget to subscribe, and please, I welcome any comments. Thank you.